The ECB in particular is sort of trying to thread the needle here, saying it's going to wind down its asset purchases, but already telling us that it's going to stand pat on rates at least till next year. What do you make of their tactics here?
Well, their policy was the expected one. They didn't really change anything. Unfortunately, in my view, this doesn't make it a good policy because ECB policy has been miscalibrated for quite some time. What the ECB has done in the last several years is allow inflation to drift down. Core inflation in the euro area has averaged around just 1% in the last 4 years. The latest readings are actually a disappointing 1.2%, which is very low and much below the close to 2% objective that they should have been aiming. So they could have been doing much better. That would have required much more accommodative policy. According to their own models, ECB models, if they had expanded QE by another trillion euro, inflation would have been much closer to 2%, employment would have been higher, debt ratios would have been better, and so forth. So unfortunately, we're seeing a continuation of a miscalibrated policy by the ECB.
And what then do you think the consequences will be of the policy if it's taken to its conclusion, considering it doesn't seem as though there's going to be deviation?
That's right. I don't really anticipate a correction from this policy. And this, to me, is likely going to lead to a classic premature tightening that we have seen in the past by other central banks. We have seen, for example, the Bank of Japan unwilling to do quantitative easing in the early 2000s, tightening policy too quickly, prematurely. The Federal Reserve has done this a couple of times in its history. And it really gives you bad results for the economy, not consistent with the mandate of the ECB. On top of that, I would add that something that surprised me somewhat today, the ECB seems to be rather tone deaf on the concerns about financial instability and fragility in markets. They seem to be impervious to the fact that spreads in a number of euro area countries have actually widened in the last few months. Italy, of course, is the country that comes to mind. And people inside the ECB know that it's actually ECB actions and threats about ending QE and about ending the eligibility of collateral of Italian government debt that is contributing to this fragility. So I'm not sure we should feel as comfortable as the outlook that was presented today.